Hey YouTube, what's going on? Chris here. I want to bring you all an update on Litecoin. Right now it is August 9th, 2019 at 7:23 a.m. Eastern Time. And guys, what I want to do today was get into basically the best case scenario that can happen for Litecoin right now, because we started to break down from some key areas, and now what we're looking for is that best case scenario for Litecoin in some must hold areas. So I'm going to dig into all this, guys. If you like these videos, like, subscribe, hit that notification bell. There's just some key things going on right now that we really have to keep our eye on and we have to pay attention to. And first of all, guys, what that's going to be is our 200-day moving average. We have been up above our 200-day moving average. We back tested it on the 24th of February. We've been up above it. So if we start falling below that, things could get pretty hairy pretty fast, and that's what I want you to just be aware of, guys. Pay very close attention to that. Now, the best case scenario for us is if we're able to have a very strong defense of this 200-day moving average with our stochastic RSI in oversold territory. Typically that's what you're looking for, guys, because we still are in that long-term uptrend. We're up above this 200-day moving average, and do you see, like over here where we put in those tweezer bottoms and we had a bullish piercing pattern here? It happened in oversold territory to where we got a nice bounce off that, and we ran up and we went all the way basically from, guys, we tweezered down to $77 and we went all the way up to around that 105 106 area, and that happened when we had that cross around that 200-day moving average in that oversold territory. And that's what we're looking for, again, for us to continue to get oversold. We're at 19 and 38 right now, so we're not there yet. We want to pay attention to just see if this does come in. And what we've been experiencing now is about 4 days to the downside, and we only had this slight little hesitation where we had that false breakout and we did not close up above this 21 EMA. And guys, it's really important now, because what's happening is we're getting trapped below that. Do you see how we tried to wick out here and get up above it? Here we had a doji, a lot of indecision above it. So now that's acting as overhead resistance, and it's almost looking like we're having a death cross of this 50 moving average over top of this 100 moving average, which could push us down even farther. So we're basically wedged between this 200 moving average and this 21, and we're just going to have to wait and see which way that we end up breaking, guys. Okay, it's crucial. I mean, like I said, we've been up above this since February, and you don't want to start going back below it. Look what happened. What happened when we went below it last time. And that's why I just said it, we really need to keep this. So this entire uptrend, we are up above this 200-day moving average. We only wicked down to it once here and tested it, wicked down over here a few times, and we had a really strong bounce or reaction out of that. But guys, once we lost this 200-day moving average, and this was May 7th, 2018, we basically had an entire year where we were trapped underneath it. So that's why I'm saying we just don't want to fall back below that and start having candle closes below that and having that act as overhead resistance, where it's just every time we get up to it, we're pounding on it, and then we just fall back down even lower. So this is a key area that I want you to be very aware of. And guys, like I said, you know, when you see opportunities to take profits in this market, we have to take profits in this market. Unless you have a dollar cost averaging plan that you're going for, you're just a long-term investor. But if you're a trader, guys, you have to protect your money the best that you can. I mean, think about this. Just a month ago, we were at almost $150, and now we're sitting here at $85. So even if you sold out around 130 or whatnot, when you saw these things taking place, this bearish divergence and, you know, stochastic crosses to the downside, you can see where we double topped right here, and then we had that downward cross. I mean, there's just so many different things that can give you indicators. And the number one thing I have to say to you is really try to control the FOMO the best that you can, because there's always going to be retracements. Look at each time Litecoin is pumped here. Look at the retracement while we're moving in the uptrend here. So beautiful pump, $40 up. We basically lost it all. Back up, nice correction. Back up, nice correction. You see that? And now what we're trying to do, guys, we were chopping in this little equilibrium pattern here, and we just have to defend this 200-day moving average. It's that critical. And you can see the pattern, because basically, guys, I got rid of my lower channel. But what our channel was from about $86 up to 103. So basically right now we're testing or breaking slightly through that lower channel that we were looking at for the longest time in purple. Let me see if I can pull that back up here. Guys, I apologize. I was working on some other charts. Let me see where we had it. I believe it was right around this area right there. So at about 86.48, let's turn that purple so we can see and just take a look at that channel. So now we have a potential to break down through that, but we're gonna have to wait for the close today. That's always important, is to wait for the close. Yesterday it looked like we had a doji, we kind of had tweezer bottoms, and then today we're just starting to roll over even more. So we do want to pay close attention to this. And what we're gonna do is dig into a few more indicators right now. So that's our stochastic. We're at 19 and 38. The next one I want to take you to is the MACD and see how it's looking, because guys, what we're trying to do is find when we're going to get that next leg up. We need that next leg up, and we need it pretty soon here to defend that 200-day moving average. All right, MACD, it's looking like we may have that negative cross here, guys. Histogram's ticking down, and it's looking like the MACD wants to cross to the downside. Now, you see back in this area, it can kiss a lot and it can get really tight, so we could move sideways for a while and then you can still break up or break to the downside, but it is looking more bearish right now. So just pay attention to the histogram, the MACD. Next one I wanted to do was the RSI. And with the relative strength index, we're pointing down. We're at 37 right now, guys, so that's something we want to keep our eye on. We can definitely go lower. We've been lower before. Even with this fall that we had here, we got down roughly to about 24 on the RSI before we got that nice little move up there for about 3 or 4 days, and then that was it. But guys, always think of these things like these moving averages as raging rivers, and now you can see almost how the waves are crashing down upon us, because what we do, we have the 21 EMA overhead, we have the 50 overhead, and we have the 100-day overhead. So the river right now in the short term is down. We're in a short-term downtrend right now, and we really need to break out of this. So guys, that's what I wanted to bring you. Maybe I can get another video tonight, like at the close. I'll try my best, maybe from my phone, just to kind of give you the update. But this is an area that really needs defended, so I want you to be aware of this. Keep your eye on it. You can see in this uptrend, for the most part, we were basically almost always holding this 21 EMA till we lost it up here. There's a few times we dropped down below it, but that's really important. I mean, guys, we were holding the 50 all the way till this time frame up to about 120, and then we just dropped all the way through that 50 as well as that 100 like it was nothing. Then we bounced back up and back tested the 100, and we lost it again. We couldn't get back up within it. Over here we had the false break, and we wicked up into it as well. So anyone who says moving averages don't play a factor in support and resistance, I think they're crazy. This is just something that we need to pay attention to, guys. On the shorter term, work your way into the hour all the way out to the longer term. So I wanted to bring you a quick one here, guys. Really look to defend this 200 moving average, and then also down here at around $66 where we had a bullish engulfing candle after we had this big fall here. We really want to see that area defended. So let me know down low, guys. Like, subscribe, hit that notification bell. Appreciate y'all. God bless.